This week, we're coming off the back of high volatility news, which was the NFP, and it seems as though the dollar found some strength from this. My name is Samson Mzera, and welcome to this session of the Market Watch series, where we look at the news, the charts, what's happening, and what to anticipate. So be sure to subscribe, like, and share. The focus for this week are two key main events, and that is the inflation report and the ECB interest rate decision. When you look at the inflation side of things, it seems as though we are not expecting a big deviation from what happened last time. And this is why the dollar looks very muted. If you look at, for example, gold, we are in a range-bound movement, and it seems as though we will continue being in this state for some time. Remember, gold is at 2,500, and traders are seeing very little reason to continue buying, apart from the fact that we are expecting Fed cuts on September 18th. This is why you're seeing it not going too high and having those resistance zones above and the support zones below that range you're seeing there. However, the inflation report coming in tomorrow might provide some volatility or some room for movement, and this might be crucial in knowing if you're going to go lower or higher in gold. The other thing that we're looking at in gold, to be more specific, is there is very little reason for the dollar to strengthen at the moment. Yes, the dollar is strengthening. We've seen it strengthening against other currency. For example, if you look at the dollar index or the DXY, we've had it recover, and now it is at a level where it has matched its previous high, and we are in that small consolidation that we're seeing over there. However, in the broader perspective, there is very little reason for the dollar to continue strengthening as aggressively unless these other currencies provide room for weakness. And speaking of these other currencies, we look, for example, at the Euro USD pair, where we've seen it go into a downtrend, and it's because we're expecting the ECB to come in later this week to cut interest rates. These expectations are enough to drive trends in the market, and that is what we're seeing with Euro USD. On the 4-hour chart for Euro USD, we have that support level that we have come down to, and it seems as though we might, or that support level might not hold for long if the market starts pricing in aggressively, the ECB being very dovish. And that is what we're looking at on Euro USD. The alternative perception, or the alternative case, is if we feel those imbalances and reverse that short-term downtrend that we're seeing on the 4-hour chart. Lastly is the S&P 500, or the indices in general. We've seen them come down because of those fears of a recession starting to set in the market. Remember, that NFP number is very mixed, and it can be interpreted in many ways. In the one hand, it is higher than the 89K we saw in the previous month, and this is sort of driving that dollar strength slightly. But on the other hand, it's still a very low reading, and this is why indices have been spooked out, and investors have been spooked in terms of getting into stocks. And this might explain also the temporary dollar strength that we're seeing, in that if we start seeing more investors being fearful of the markets, then people will start piling into the dollar and away from indices. And that is why you're seeing that sort of short-term downtrend witnessing in the market. So we've seen S&P pull back to fill that imbalance, and now it's looking consolidated. However, if there are more fears in the market, then this might result into it heading lower. However, we'll be looking into tomorrow's inflation report to see where it's going to head to next. But the theme here is investors are now driven by fear instead of optimism, and fear is how you're going to interpret what the readings come in. So if you see employment numbers coming in really low, that's going to increase that fear gauge, and that might lead stocks lower. If we see, for example, inflation still being very sticky and still being very stubborn, then it might compel the Fed to leave rates higher for longer, and that might in turn cripple the economy and increase the fear. So those are the things we're looking at in a nutshell. Having said that, thank you for attending this session of the Market Watch series. Remember, if you want to trade any of these assets or instruments, you can always check out the HFM website or visit the description below this video. And see you in the next one.